It's one of the worst performing stocks in the market, but could it be a time to get in on Supermicro? Here to share more about why some people say now could be a time to get into SMCI is MarketBeat analyst Gabriel Osorio-Mazilli. Gabriel, this stock has had a terrible 2024.
That is absolutely right. It's one of the worst performers in the industry. And now that it trades at 23% of its 52-week high, some people might be scared, but others will realize that this is an insane risk to reward play here.
Yeah, let's talk about that. Buying a beaten down stock. A lot of Wall Street, a lot of those institutional buyers, they don't like to get into stocks that just keep going down. Why would anyone want to buy at this point in the stock?
Well, it's funny that you mentioned analyst reluctance to get behind a stock that has been beaten down so much, which is why it makes it all the more important to watch the consensus price target today, which is at 66 and 90 cents a share, right? So from today's level, that would mean 105% upside. So these analysts are obviously willing to risk their reputation and careers on it, and there might be a reason why behind it.
Yeah, we are going to dive into that today in this video. We've talked about Supermicro before on this channel when, we thought then was the dip and then was the time to get in, and it's just kept going down. Let's get into, before we talk about why analysts think it could go back up, what's behind some of the stock drop over the last few months.
Yeah, so in a nutshell, what happened to Supermicro was a delay in the financial reporting, which is never good. It makes people think fraud right away, makes people think that the books are cooked. And there are some reasons to be wary, but I believe that at this point, any and all bad news might already be priced in at the low price that we have today.
Yeah, speaking of news, we know the earnings is coming up on Monday, and we always hear buzz around it, wondering, are those financial reporting issues going to be resolved? What could come out at earnings? What are people expecting with whatever comes out on Monday?
Well, the expectations are high. The tensions are very, very high, as you already mentioned. And today, what we see is a discount on a forward price to earnings ratio. This is the market's way of pricing tomorrow's earnings today. And it trades at half of the industry average while still looking to grow its earnings per share at double, if not triple the rate. So, in a nutshell, the stock seems very, very cheap going into earnings and still have the expectation from Wall Street to keep beating on growth rates.
Now, why is the expectation so high for this company? What are they doing right that gives people and investors such confidence that they will eventually start to grow again?
Well, one of the things that they do right is being exposed to the market's attention around quantum computing, AI, and semiconductors. So while they act as a storage service, all of these services from Supermicro are going to be extremely important in the coming years for the technology sector.
Yeah, there's a lot of different companies and stocks that we talk about that are in that same space. You can actually get a list on marketbeat.com right now of the 10 best AI stocks to own in 2025. You can scan the QR code here or click the link in the description of this video to get that free report on marketbeat.com right now. And there's some pretty interesting picks on that list. Now, back to SMCI, Gabriel. What sets Supermicro apart from some of its competitors?
Yeah, so Supermicro has an in-house team dedicated to energy efficiency for the data center services that they provide in cloud computing. And that also allows them to dedicate more of their time to solving customer solutions, where other companies rely on third parties and other external services that they not always may have the control over.
Yeah, that certainly seems like it will set them apart. Is it paying off yet, though, in the form of contracts and maybe more revenue potential for the company?
So far, Wall Street analysts expect 66% revenue growth for 2025 and somewhere in the 20th percentage for 2026. So we could pretty much say contracts are coming in and customers see no issue with Supermicro services.
Those are very good signs, but the stock chart still gives some investors pause right now. Are there enough good signs in this company's financials to make an investment bet on this company?
Being a contrarian in today's market is what pays. And even though the stock price is down, even though there's a lot of scandal for Supermicro, the future financials for the company do show that there's no reason to worry right now. And that is also what State Street buyers are saying by building up a $890 million position as of the last quarter. For the first quarter, January 2025, we also see a lot more institutional buying. So you could either try it out yourself or you could trust the hours and hours of work that these analysts have put in and also see bullish reasons to be in the stock right now.
Very good. Well, we're almost wrapping up our conversation here on SMCI. One thing I want to look at with so much volatility in this stock, are traders getting into this stock as a short term play, or is this more of a long term investment where you can buy in at a lower price right now and hold long term to see where this company goes?
Well, if you believe in the future of data centers, AI, and quantum computing, this might be a play you want to stick around for in the next year or two. And as you see in the short term, a 13.8% decline in short interest would also tell you that traders, especially the bearish ones, are looking at the short term potential for a pivotal point now that the stock has potentially reached the lows.
Thank you so much for running through some of these details on this very controversial stock that's had such a rough year. If you want to see some of our other videos on SMCI, we have some of those here for you to watch too. Thanks again for joining us today on MarketBeat, everyone. And as always, happy investing.